Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WESTLAKE Chemical Partners LP quarterly report. Westlake Chemical Partners LP offers various businesses and services, including acquiring and developing ethylene production facilities, operating ethylene production facilities that convert ethane into ethylene, selling ethylene co-products such as plus propylene plus crude butadiene plus pyrolysis gasoline plus hydrogen. These products are sold directly to third parties on a spot or contract basis. The decline in Westlake Chemical Partners LP's stock price over the past year can be attributed to several key factors. The company's poor performance was evident in its first quarter 2025 earnings miss, where it reported lower than expected EPS and revenue due to increased costs and unfavorable sales mix changes. This trend continued into the second and third quarters of 2025, with decreased cash flows from operating activities and MLP distributable cash flow. The company's financial results were also impacted by a soft global industrial environment and reduced margins on ethylene sales. Furthermore, new 52-week lows were reached in October 2025, reflecting the cumulative impact of these challenges. These factors collectively contributed to the stock price drop of over -8.91% in the past year. The primary drivers of revenue growth or decline at Westlake can be attributed to a few key factors. On the positive side, revenue growth is driven by an increase in net sales from $276,539 in 2024 to $215,799 in 2025, as well as higher ethylene production capacity and lower feedstock and natural gas costs. However, there are also drivers of revenue decline. Specifically, lower ethylene and co-product sales volumes due to the Petro 1 turnaround have contributed to a decline in revenue. Additionally, higher ethane feedstock and natural gas costs have also negatively impacted revenue. These factors highlight the importance of managing production capacity and input costs in order to maintain revenue growth. Net income experienced fluctuations between 2023 and 2025. It initially increased from $86,214 in 2024 to $281,772 in 2025, indicating a significant growth of 226%. However, it then decreased by 23.8% from $281,772 in 2024 to $214,318 in 2025 for the 9 months ended September 30. Profit margins also underwent changes during this period. The gross profit margin increased from 32.3% in 2024 to 37.9% in 2025, while the operating profit margin rose from 29.8% in 2024 to 35.2% in 2025. However, for specific periods such as the 3 months ended September 30 and 9 months ended September 30, there were decreases in both gross and operating profit margins. The reasons behind these changes are multifaceted. Various factors contributed to the fluctuations, including alterations in operating expenses, depreciation and amortization, and other income/expense items. Additionally, a decrease in net sales due to volume and an increase in fuel costs, natural gas, by 45.2% and 60.6%, as well as an increase in feedstock ethane by 47.4% and 37.6%, also played significant roles. The company is generating a significant amount of positive operating cash flow, with net cash provided by operating activities totaling $160,090,000 for the 9 months ended September 30, 2025. This indicates that the company's operations are generating sufficient funds to cover its expenses and investments, resulting in a substantial increase in cash reserves. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, while long-term debt payable to Westlake has remained unchanged at $399,674, proceeds from debt payable to Westlake decreased by $28,000. Additionally, net cash used for financing activities decreased by $69,964. However, total liabilities have remained relatively stable. Regarding interest expenses, there are notable decreases in interest expenses on debt payable to related parties in Westlake. Specifically, interest expenses on debt payable to Westlake decreased by 13% from $19.9 million to $17.4 million. Furthermore, the weighted average interest rate on all long-term debt has decreased from 6.4% to 6.1%. These changes indicate a reduction in the company's interest expenses and overall financial burden. Management's outlook on company strategy. The company's management is focused on improving operational efficiency and reducing costs to mitigate market fluctuations. They aim to distribute excess cash generated by operations to partners and fund capital expenditures through external sources. To reduce variability in cash flow, they plan to reserve additional cash annually for turnaround costs and invest excess cash with Westlake. Management also emphasizes the need to mitigate exposure to commodity price fluctuations, which is expected to impact the company's outlook. They intend to use unspecified measures and possibly derivative instruments to reduce price volatility risk. Overall, management is taking proactive steps to navigate market uncertainties and ensure the company's financial stability. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights two pressing concerns: inventory buildup and supply chain disruption. The data suggests that the company has accumulated a significant amount of finished products inventory, increasing by $1,139,000 from December 31, 2024 to September 30, 2025. This buildup is not only tying up cash, but also indicates potential inefficiencies in production planning. Furthermore, the supply chain is facing disruptions due to conflicts in the Middle East and between Russia and Ukraine, leading to volatility in raw materials and energy costs. Operating interruptions are also a concern, adding to the complexity of managing the supply chain. These issues pose significant challenges for the company's operations and profitability. That concludes the financial summary for WESTLAKE Chemical Partners LP. Feel free to comment below, and I will be happy to answer them when possible.